Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically to talk about bond sales. Now, bonds are basically loans, and this is the main way that governments fund themselves. When we talk about countries being in debt, it's generally bonds that they're issuing. So they issue a note which says, I will pay back the bearer of this bond $100 or 100 rubles or whatever the currency is in a set period of time. So it might be in 10 years time, 15, 20, 25, 30 years time. And during that period, the holder will be paid interest in the form of a coupon. And the coupon basically is set at whatever the prevailing rate of interest is in that country at that time. And Russia has been using bonds recently to try to fund all of its expenditure because obviously its income is now being limited as a result of the sanctions. And in today's video, I want to talk about the fact that Russia is now struggling to be able to raise bonds. And that's surprising because over the course of the last 14 months, Russia has been increasing its interest rates as a result of increasing inflation. We've talked about this many times before on the channel, but most countries use interest rates as a way of tackling high inflation. So when inflation rises, generally speaking, you'll increase your interest rate. That basically makes borrowing more expensive, so individuals and companies will generally reduce the amount that they're borrowing. Therefore, there's less cash available, so they'll spend less, and that means that demand falls, and therefore prices should go back down. That's the general logic. But in Russia, over the past 12 months, we've seen a rapid increase in inflation. And in response to that, the Russian central bank has increased interest rates on 7 separate occasions over the past 14 months, with the most recent being an increase of 100 basis points to 19%. And 19% is a really high yield. If you think about this in your own context, if you were being paid 19% for money that you were putting into the bank, that would be a fantastic return. People would be delighted with a yield of 19%. But unfortunately, from Russia's point of view, that isn't the case in the market right now, and Russia is struggling to be able to issue enough bonds to keep funding all of its expenditure. So in today's video, I'll have a look at what's been happening with Russian bond issuance over the course of the last 20 years, but specifically, we'll be looking at what's been happening since Russia invaded Ukraine. We'll have a look at what's going on with bond yields, because yield is really what people invest into bonds for. They want to make a return, and you would think that a high yield would equate to high demand, but that's not happening in Russia right now. We'll have a look at what's been happening with overseas investors, because that's one of the critical things from Russia's point of view. Over the course of the last 20 years or so, there has been a general increase in demand from overseas investors. However, since the invasion of Ukraine, that situation has turned around. And then finally today, I'll wrap up with my summary as to what I think is happening with Russia right now with regards to its interest rates, inflation, and bond appetite, and what the implications of struggling to be able to raise enough money through bonds will be for Russia going forward. But before we get into all of that, I'd like to say once again, thank you so much to everyone that's supporting the channel. Really, really mean this. If you're a long-term supporter, either through Patreon, where you can get early access to my videos and watch them advert-free, or YouTube membership, where you'll also get early access, or buy me a coffee membership, thank you for that long-term support. It really does help to keep me going. And if you've bought me a coffee or sent me a YouTube super thanks recently, thank you so much for the time and the effort and the generosity involved in that. Really do mean it. Now, just before we go on any further today, I want to talk to you about today's sponsor, NordVPN, who I use on a daily basis and who are offering Joe Blogs viewers an exclusive deal. Unfortunately, cybercrime is becoming a daily occurrence. We're hearing about it more and more. And in fact, if you follow the channel, you'll know that this channel itself was hacked by cybercriminals. And if you want to avoid the same thing happening to you and your finances, you need to start using NordVPN. By using NordVPN, every time you log on, you'll be protected from all sorts of criminal activity. And don't override it like I did and expose yourself to a hacking incident. I spend a lot of my time researching articles to put together my videos. And unfortunately, I find that sometimes I'm geo-blocked from those articles. I'm not in the right country. However, when using NordVPN, you'll be able to access information, data, news articles, TV shows, movies, and sports matches that are not available in your region. And the great news is that Joe Bloggs viewers are being offered an exclusive deal, which you can access by clicking in the link below. And the great news is that it offers a 30-day money-back guarantee. So if you're not happy, you can get your money back within the first 30 days. As I mentioned at the start of today's video, the way that most governments around the world are funding themselves is through the issuance of bonds. If you need to raise money to pay for all of your budget, you raise money from investors. You issue bonds promising to pay those investors back in 5 or 10 or 15 or 20 or 30 years' time, and those bonds will have a fixed coupon attached to them. And you would think the fact that interest rates are currently running at 19% would make Russian bonds highly attractive in the market because you can earn a coupon of 19%. However, unfortunately for the Russian authorities, that isn't proving to be the case. This chart, which has been put together using data from the Russian Ministry of Finance, shows the proposed level of bond raising by the Russian government and the actual amount raised per quarter dating back to the first quarter of 2022. The blue bars on this chart show the proposal by the Russian Ministry of Finance, basically how much they were looking to raise each quarter, and the green bars show the actual amount that they've raised in terms of issuing those bonds. So we start off by looking at what happened in the first quarter of 2022, which includes the period when Russia invaded Ukraine, which started on the 24th of February 2022. You can see that in that first quarter, Russia was looking to raise 700 billion rubles in bonds. However, because of the impact of the war, the actual amount it raised was less than 100 billion. Now, the second quarter of 2022 was the first full quarter of the war, and at that time, commodity prices were all over the place, and nobody really knew what was going to happen. And you can see that the Russian authorities didn't look to raise any bonds and didn't raise any money. Now, in the third quarter, the Russian authorities tested the market to see if there was any appetite, and there wasn't. And in the fourth quarter, you can see that once again, they tested the market. And interestingly, there was a lot of appetite from investors at that time, and they raised 1.2 trillion rubles in that quarter. Now, unfortunately, no details have been provided as to who the investors are, but it's likely that that came from pent-up demand within Russia. Now, interestingly, in the first quarter of 2023, the Russian authorities increased the ask to 800 billion rubles. But unfortunately, investor demand was down, and they only managed to raise 650 billion. In the second quarter of 2023, the authorities increased their ask to 850 billion rubles, but only managed to raise 800. And in the third quarter, Russia ambitiously was looking to raise 1 trillion rubles, but only managed to raise 650 billion. In the fourth quarter of 2023, the ask reduced to 500 billion rubles, and the Russian authorities managed to raise 550. So in total, during 2023, Russia was looking to raise 3.15 trillion rubles, but only managed to place bonds to the value of 2.65 billion, which represents a shortfall of 500 billion rubles, or around 16%. In the first quarter of 2024, Russia was looking to raise 800 billion rubles, but only managed to secure orders for 750. However, in the second quarter of 2024, which is the most recent statistics that we have, Russia was looking to raise 1 trillion rubles, but only managed to secure orders for 350 billion, which represents a shortfall of around 65%. And this is despite the fact that Russia has increased its interest rates significantly over the course of the last 14 months, from around 7.5% to the current level of 19%. And when you look at the performance over the past 6 quarters, the Russian authorities have looked to raise 5 trillion rubles. However, they have only managed to secure orders for 3.75 billion rubles, which represents a shortfall of 25%. However, if you look at the performance in the first half of 2024, the first and second quarters, the combined shortfall of 700 billion rubles against the ask of 1.8 trillion represents a shortfall closer to 40%, which is obviously highly concerning from Russia's point of view, particularly when you take into account that the yields being offered in 2024 are significantly higher than they were in 2023 as a result of the fact that Russia has been rapidly increasing its interest rates. This chart shows the historic yield on Russian bonds dating back to 2002, and the scale on both sides of this chart goes from 0% at the bottom to 25% yield at the top. And what this chart shows is that historically the yield on Russian bonds has been high, averaging more than 5% over the course of the past 22 years, and at certain times the yield has been extremely high. Back in 2002, which was a period when the Russian economy was struggling, the yield on Russian bonds was above 15% and actually rose to a high of just under 20% before coming back down to less than 5% by 2004. Now, between 2004 and 2008, the bond yield stabilised at around 6%. However, following the global financial crisis which hit the world in 2008, bond yields rose to around 15%, and then normalised back down to around 6 or 7% between 2010 and 2014. Now, 2014 was the year when Russia annexed the Crimea area previously of Ukraine, and as a direct result of that and the sanctions that were applied against Russia at that time, the Russian economy started to decline, and the yield on Russian bonds increased from around 6% to closer to 20%. Now, as the Russian economy recovered and got back to normal, bond yields came back down, and by 2021 they were actually down to less than 5%, which is one of the lowest levels that we can see on this chart. However, following the invasion of Ukraine in 2022, bond yields in Russia spiked again as a result of the fact that there was concern from investors as to what was going to happen in Russia, and so they were looking for bigger yields in order to take that risk, and bond yields rose above 15%. Now, during 2023, the yield on Russian bonds actually fell below 10% as a result of the fact that the Russian central bank significantly reduced the official rate of interest from the emergency rate of 20% that was introduced immediately following the invasion of Ukraine down to a level of 7.5%. However, as you can see, over the course of the past 12 months, as the central bank has increased interest rates in order to try to offset what was happening with inflation, the yield on Russian bonds has increased to the current level of around 18 or 19%. And when you take a step back and look at where these bonds sit in the last 22 years, the current yield is close to the highest that Russian bonds have paid. However, despite that, demand for Russian bonds at the moment is falling, and that's as a result of what else is going on in the Russian economy and concern from investors both in Russia and overseas as to what's going to happen over the course of the next 6 to 12 to 18 months. This chart shows the percentage share of Russian bonds being held by overseas investors between February 2012 and February 2024, which is the latest data that we have available. The blue section of this chart shows the value of those overseas bond holdings and is measured against the scale on the left-hand side, which is shown in trillions of rubles, and the red line chart shows the percentage of bonds held and is measured against the scale on the right-hand side, which goes from 0% at the bottom to 40% at the top. So if we start off by looking at the total value of the bonds, which is shown by the blue section of the chart, back in February 2012, the value of bonds held by overseas investors was very small, less than 100 billion rubles. However, as you can see, over the course of the following 10 years, there was a significant increase in the value of bonds being purchased by overseas investors as Russia became more attractive to the international markets, more international companies moved to Russia, established businesses, and so the Russian economy became integrated into the global economy. And by the end of October 2021, the total amount of Russian bonds in overseas investors' hands was 3.4 trillion rubles, which represents an increase of 34 times over that 10-year period. However, as you can see, following Russia's invasion of Ukraine, which commenced in February 2022, there's been a significant reduction in the value of Russian bonds being held by overseas investors. And as at February 2024, the total value was down to 1.4 trillion rubles, which represents a reduction of 2 trillion rubles, or around 60%, in a 2-year period. If we now have a look at the red line, which shows the percentage of Russian bonds being purchased by overseas investors, back in February 2012, the percentage was sitting at around 4%, which means that at that time 96% of all of the Russian bonds were being purchased by Russians. In the 12 months between February 2012 and 2013, there was a significant increase in the percentage of Russian bonds being purchased, and by February 2012 it was up to 28%. Now, following Russia's invasion of Crimea and subsequent annexation, there was actually a reduction in demand, and by February 2015 the amount of Russian bonds being purchased overseas had fallen to 18%. Over the following 2 years, the interest in Russian bonds increased for overseas investors, and by February 2018 the percentage being purchased was up to 32%. As a result of the slowdown in the global economy in 2018, and particularly in the Russian economy, the appetite for Russian bonds fell, and by October 2018, the percentage being purchased by overseas investors was down to 24%. However, that appetite soon returned, and by February 2020, 35% of all Russian bonds were being bought by overseas investors. However, as you can see, over the course of the past 4 years, the amount of Russian bonds being purchased overseas has fallen significantly, and by February 2024, it was down to 7.2%. And if the current trend continues, it's likely that the amount of overseas purchases will be reduced to virtually zero, and that means that Russia is now fully dependent on raising all of its capital from the Russian market. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening with regards to interest rates and inflation and bond sales are really important in telling us the real story as to what's going on with the Russian economy right now. If you just look at the press and look at GDP figures, you'd think that Russia is doing fantastically well. And of course, I'm hit with thousands of comments like that every single week. People telling me that Russia's actually the strongest economy in the world, and I'm talking a lot of rubbish. But actually, you need to look at the fundamentals, because GDP is something that is relatively easy to inflate, particularly if you do what Russia is doing right now and start sponsoring all of the companies within Russia, paying them directly from the central bank to produce lots of things for Ukraine. That is bound to drive up the profitability of those businesses and will increase your GDP. However, those sales are not genuine sales. Russia isn't selling things to the rest of the world. It's basically paying itself using its reserves. And if it continues to do that, it will run out of cash at some point in the future, because there's no external money going into that whole process. So looking at the fundamental factors on the economy, what's happening with inflation and interest rates really gives us a much better read as to how healthy things are in Russia right now. And what we've seen is that, contrary to the rest of the world, inflation has risen rapidly over the past 12 months and is now sitting at more than double the target rate of 4%. And that target rate of 4% is actually double the target rate for most other economies in the world. Most developed economies have a target rate of 2%. So 4% is already more than you'd expect. But the fact that inflation is actually sitting at 9% tells us that there are some serious problems. And that inflation is being driven by a number of factors. Firstly, the move to the wartime economy has fueled it, because those companies that are being paid by the Kremlin have been recruiting heavily. They've been trying to get in as many people as possible to keep producing as much as possible to get paid all of that exceptional profit. They're offering higher wages to attract in those people. Those people who are leaving their jobs are then leaving vacancies behind, and those companies are having to compete in this new market, so they're having to offer higher wages as well. So if you're an employee in Russia right now, it's a great time because there's lots of money available, you're being paid lots of salary. So all of the people in Russia have got lots of free income, so they're spending, they're going out and spending in the stores. That's driving up inflation. So partly this inflation is being driven by the move to the wartime economy, but it's also being driven up by what's happening with imports, because the sanctions that have been applied against Russia has restricted the availability of certain goods because companies won't sell to Russia. Simple economics tell us that when there's a restriction in the supply and demand remains high, then prices will rise, and that's what's happening in Russia right now. Now, in order to try to counter that high level of inflation, the Russian central bank has been increasing interest rates, and it's increased them on 7 separate occasions in the past 14 months, from 7.5% to the current level of 19%. And that 19% is really quite interesting because it's only 1% below what Russia regarded as an emergency rate back in February 2022. So Russia is telling us that its interest rates are now back to emergency levels. That tells us that there's an emergency going on in the economy right now and that Russia needs to solve it. So anybody that thinks that the Russian economy is doing really well just needs to look at what's happening with interest rates and the fact that the Russian central bank is still concerned about what's happening. And when you look at what's going on with producer prices, they're continuing to rise at more than double digits, so therefore it's likely that inflation will continue rising. So all of this is seriously bad news, but the biggest issue I think coming out of today's video is that Russia is now struggling to be able to place its bonds, because the way that it's financing a lot of its expenditure is by issuing bonds, basically debt. It issues a promissory note saying to people, we will pay you back at some point in the future, give us your money now, we'll spend it on whatever we like, the war in Ukraine predominantly, and at some point we'll pay you back. Now, investors would look at the yield normally and say, 19%, wow, this is fantastic, we will take as many of those bonds as you can issue. However, with any form of lending, you always have to look at the risks. And investors are looking at Russia right now and saying, okay, the yield is 19%. Why is it 19%? Is there something happening? And when you look at what's going on in the economy, it tells you that there are alarm bells ringing. There are concerns about what's happening right now and whether or not Russia will be able to pay that debt back in the future, because there's no point taking a bond if you're not going to be repaying it. You'd rather go for a lower yield and know that you're going to get your capital back. And that's what's happening with investors right now. Overseas investors have pulled back from Russia, and investors within Russia clearly are cooling their demand for these type of bonds. So we saw from the data that Russia only managed to raise around 1/3 of the total of 1 trillion rubles that they were looking to raise in the second quarter of 2024. And it'll be really interesting to see what happens with the data when it comes out for the third quarter, because if Russia has had its supply of bonds cut off, if it can't raise any more debt, then it's going to have to dip into those reserves that it's got already even further, and that will accelerate the rundown of that cash and could lead to Russia running out of money. So the overall summary of today's video is that Russia has once again increased interest rates. The reason that they're increasing interest rates is because there are serious problems in the economy right now, which are showing up through rising inflation. If Russia doesn't sort this out, we could get to a point where inflation rises even further, interest rates go up even further. Unfortunately, from Russia's point of view, despite the fact that they're increasing the yield on their bonds, nobody wants to buy the bonds right now because investors are concerned about what's happening, and all of this is seriously bad news for the Russian economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.